Rate Slayer here, and I am back with the fifth and final episode of the April 2022 Weekly Market Insight Series, coming directly from the Capital Markets Trading Desk, at SunWest Mortgage Company. Financial market volatility continued, but with something of a new dimension. No doubt it has been a busy week, needless to say. As the central bank scrambles to get a grip on inflation running at its highest since 1981, the prospect of slower economic expansion alongside persistent inflation and unexpected GDP data led to a febrile mood in markets. Although a momentary relief rally in equity markets led by soothing corporate earnings tried to play down the nerves marked by China's struggle to suppress COVID, Russia's war in Ukraine, and worries about Federal Reserve monetary tightening, but couldn't be sustained longer. As the war now enters a third month, President Biden plans to supplement U.S. support and humanitarian acts for Ukraine. America has lifted some restrictions on sharing intelligence with Ukraine as it confronts a renewed Russian military assault in the east and the south. Deputy Treasury Secretary Wally urged U.S. business and financial leaders to invest in or restart operations in war-ravaged Ukraine. In opposition, Russia says it will cut gas flows to Poland and Bulgaria, a major escalation in the standoff between Moscow and Europe. So what else is underneath the surface, you say? Well, U.S. Treasury yields slid as the week started, but climbed back as the weekend approaches due to amplified misdimensional concerns. Crude prices have struggled for direction this week as China's spreading virus outbreak continued to weigh on the outlook for global demand. West Texas Intermediate futures were traded near $101 a barrel. The U.S. currency has seen broad gains this week. It has outperformed a group of 10 of its counterparts, hitting a 5-year high versus the euro and the strongest level since July 2020 against the pound. The U.S. merchandise trade deficit widened unexpectedly to a new record in March. The shortfall grew almost 18% to $125.3 billion last month. The U.S. economy unexpectedly shrank last quarter as a ballooning trade deficit and softer inventory growth weighed heavily on solid consumer and business demand picture, marking the first contraction since 2020. Gross domestic product fell at a 1.4% annualized rate after a 6.9% pace of growth at the end of 2021. Initial jobless claims continue to paint tightness in the labor supply. The insured unemployment rate held at 1%, consistent with a national unemployment rate of roughly 3%. Initial jobless claims for the week ending April 23rd fell to 180,000 from the prior week's 185,000. The Biden administration is drawing on emergency funding powers not used since 2014 as part of an effort to provide $670 million in food aid to nations at severe risk of hunger due to Russia's invasion of Ukraine. China's zero-tolerance approach to COVID-19 is sparing no industry from the chaos. Closing factories and ports has unleashed a new wave of mayhem on global supply chains that may ripple around the world for the rest of the year. Now, I'm sure you want to know how the housing market is doing, right? Well, let's get to it. While the housing market is now in its traditionally busiest season, signs of a cool down are emerging due to continuously rising mortgage rates. The Mortgage Bankers Association index of total applications dropped more than 8% in the week ending April 22nd, led by a 9% drop in refinances and slightly less than 8% in purchases. According to the latest Federal Housing Finance Agency House Price Index, house prices rose nationwide in February up to 2.1% from the previous month and 19% from February 2021. New home sales decreased more than 8% month over month in March to a seasonally adjusted annual rate of 763,000 units from an upwardly revised 835,000 in February. On a year-over-year basis, new home sales were down more than 12%. So let's wrap it up. Fed Chair Jerome Powell has already mentioned that 50 basis points rate hike is almost a done deal in May, and furthermore added that multiple half percentage point interest rate increases may be on the table in the upcoming months. However, there were no hints from Fed members this week as Federal Reserve policymakers are in a blackout period ahead of the May 4th FOMC meeting. Let's keep an eye on it. Okay, folks, that's all we have for the current week. Please join me for our May series to get more market updates and decisions of FOMC's monetary policy. And as usual, stay updated with our news, as our trading desk will keep you informed with our pricing incentives. Happy Friday, everyone, and have an exceptional weekend. Buffy, out.